Hello everybody and welcome to my video on Zscaler. So today I wanted to discuss why I'm investing in Zscaler, and so this is not investment advice, of course, but I think Zscaler has a very unique position in the cybersecurity market, and I think it could be a good company to invest in because they've pretty much invented what they call the zero trust platform of the zero trust architecture. And they are a leader in that field. In fact, they have 40% of all of the firms in the Fortune 500 and 30% of the Global 2000 are using their service. They have a very high net promoter score when it comes to SaaS. That's very, very uncommon to see that. They're NASDAQ 100 listed. So that should give us some stability in theory. And so I just think they have a lot of good things going for them. Not to mention they're operating in the cybersecurity field. And so the cybersecurity spend is the last thing that IT is going to cut, which is why I really like Zscaler. So let me just go a little bit into greater depth as to what Zscaler does. They have a very unique setup, a very unique system where in the past, right, 10 years ago, most people would come to the office and they would log in. And once they log in, they enter the company network. And once they enter the company network, they have access to everything within the network. And that's what they used to call the moat and castle system, where once you've entered in the castle, you can access headquarters, you can access the server, you can access the factory, you can access all of your data from that. But the problem is that any breach, right, any breach in that system, anywhere in that system, means that the whole system could be infected. And furthermore, there were other opportunities for breaches when, as companies migrated to the cloud and started using cloud services, firewalls became a thing. And so you needed firewall on each device, your device. You need a firewall to access the cloud. And firewalls was another point of vulnerability. So this castle and moat system is very problematic because if someone breaks in, if someone gets through the firewall, they have access to the whole system. And they've changed that by introducing the zero trust architecture. So, what is the zero trust architecture? It's the idea that every single connection to any app, any system, any data center has to be identified through the cloud. There is no trust. You don't enter the castle and can do whatever you want within the castle. No. Whenever you want to do anything within the business, you need to identify yourself. And so there is no trust anymore. It's a zero trust exchange where every single transaction gets verified. And of course, that really, really limits the odds that you're ever, not ever, but that limits the odds that you're getting attacked. And that's the way they put it, is you eliminate the attack surface. So you make the apps invisible to the internet or anybody with which there's nothing to see. Then you stop lateral movement, right? When we talk about this is lateral movement. When you're going from one headquarter to the data center to the factory, that's lateral movement. You stop that lateral movement. There's nowhere to go, because to go from one app to another app, or one factory to one customer, or to one data center, or to one Internet of Things system, you would need some lateral movement possible, so some trusted architecture, and there is no trust. So you can't move if you ever breach a system. And then you prevent compromise and stop data loss, because you always verify and inspect everything and every transaction that happens, so there's nowhere to hide for you in the system. And it's a very powerful, unique way to approach security in your enterprise beyond just a firewall. So, what can we say about this company? Well, this company has been doing so well, right? They've been growing for the longest time at least 55 to 60% year over year, quarter over quarter, and growth is going on and on again. I actually listened to the conference call recently, and they are in a good position. They're saying as they're in a good position. They provided very conservative guidance, and really they're setting up the market for a positive reaction, regardless of how they do. Well, at least they should do well, because they are in cybersecurity and because companies are not going to cut spending on this. What's the competition? The competition is CrowdStrike and Palo Alto Network, but they have newer system and newer products. They are not the leader. They've entered later in that market. Zscaler is really the leader, and they really have a net promoter score to speak for it with a 70-point net promoter score out of 100. That is really high. They have very little concentration on none that I can see. The dollar-based net retention rate is really high at 125%, and they are recession resistant. Lastly, their TAM is tremendous. At 72 billion in 2025. They only have $1 billion a year in revenue right now, so they can 72x theoretically their revenue. So they have a potential to become a really large company. They've acquired a minimal amount of firms, which is something I love. And again, the marketing expense is a little high, as any SaaS business, but marketing expense is an investment here because they have a high dollar-based retention rate. So if you spend a lot of money to acquire a customer, you can reasonably expect that the customer will stay with you for a while. Let me move on to some of the financials, or at least some of the metrics that I look at. What I care when I invest in a growth company is I care that they don't go bankrupt. That's the main thing I care about, that they have enough of a runway for their thesis to materialize. And they have a positive cash flow from operation at 300 million. So they are not anywhere near bankruptcy. And they also have 1.7 billion of cash on the balance sheet, which means that bankruptcy is not a concern, even though they technically lose money. But again, that's not a big risk for me because bankruptcy is not on the table. Gross margin is 81%, which is very good, very high, and their price to gross margin is a 22x. So again, that's a high price. That's a very high price for this. But the company is a leader. They've been growing really fast. They're growing even faster than Tesla, for example, which is pretty impressive. And they're in a recession-proof field, right? Cybersecurity, nobody's going to cut it. They have a little bit of debt, right? That's not ideal, but they're still a robust company. Dilution has been just a tad every quarter, but nothing too concerning, right? Whenever I use dilution, I don't want to see any spikes. It's the spikes that concern me, but I'm fine with a little bit of dilution in the short term because you want them to use stock-based compensation. Stock-based compensation really doesn't affect your cash as a company, and it makes you more anti-fragile. The cash is so important, especially as we enter a recession. Insider ownership is huge. The CEO and another internal member of a firm own 40% of a firm. So that is huge. That is like one of the highest ownership I've ever seen. The CEO himself owns 20% of all the shares, and the firm is founder-led. Lastly, revenue per employee is $219,000 per employee. That's my preferred metric of productivity that I often use in my videos. Apparently, I'm the only one to use that, but I really like it. Usually, I would not be happy with 219,000 per employee, but because Zscaler has a large workforce that's internationally located, and much of it is in India actually, I am fine. I am fine with that because compared to the average salary, that is a really high productivity number. So I'm very happy with that. And of course, this company has been doing so well, and therefore that's why it's only down 63% this year because of the macro. I know it sounds like a joke, but it's not. This company has actually been doing really well. I was studying Sentinel-1 last week. Sentinel-1 was down. Sentinel-1 was down like 78 or 79% on Sentinel-1. So actually, surprisingly enough, minus 63% is good. Wow. Can't believe I just said that. So anyways, I love Zscaler. I have a small position in Zscaler. My favorite play in the the cybersecurity world, my favorite play is CrowdStrike. Hence, why I have a smaller position in Zscaler. It's about 1% of my portfolio, but I like Zscaler. It adds diversification in a field where it is the leader and where there is little competition to speak of, in my opinion. They're the leader, right? Consistent 55 to 60% growth. That's why I own the stock. Huge growing runway, recession-proof, high insider ownership. So there's a lot to like about this stock. And lastly, the key question that I often ask in this channel is that, could this company 10x in 10 years? Well, right, on a first look, that's a bit of a stretch because that would be 190 billion. But remember that the thesis of this channel, beat the denominator, is the dollar is getting diluted. So $1 today in 2022 is worth $1, right? But $1 at 2032 will be the equivalent of 25 cents of today. So the dollar per my estimates of what's going to happen to monetary printing within the next 10 years, I estimate that the dollar will be divided by 4 in value. And if you adjust for that, actually, if you adjust for the dilution of the dollar, that would mean that a 10x would only equal to today a $47 billion valuation. And per that calculation, could I see Zscaler be worth $47 billion of today's money? And the answer to that is yes. Yes, because they have a leading position in a very important part of the cybersecurity landscape, and I don't see them losing that position. So again, none of this has been investment advice. Thank you so much for watching. Don't forget to like and subscribe my video. This is just entertainment, not investment advice. And you can follow me on Twitter at @beatthedenominator, and I appreciate your comments, likes, and subscribes. Thank you.